So as I'm sure you guys already know, Tesla crushed Q1 delivery estimates. And as a long-term investor in the stock, I've been getting asked to share my thoughts on what I think the rest of 2020 will look like for them, given everything that's going on right now. That global issues spreading around the world, the stock market crashing, the global economy essentially being shut down and likely already in a deep recession. How do I think all of these things are going to impact Tesla, and what do I think it means for them this year and kind of going forward? Well, let's find out. Hey, what's up everyone? My name is Ale. Welcome back to my world of stocks. By the way, make sure you hit the like button if you appreciate this update on Tesla. It really helps the channel and it means a lot to me. But let's go ahead and kick things off with a quick update on that first quarter, and then we'll transition over to what the rest of the year I think will look like for Tesla going forward. So going into the quarter, analysts were lowering their estimates and projected around 77,000 deliveries on average, according to Bloomberg, with Credit Suisse, which is one of the most commonly used estimate firms out there, putting it right at 77.5 thousand deliveries. And by the way, most people were still expecting Tesla to fall even lower than that, given all the macroeconomic weakness, which we'll discuss further a little later in the video. But this article from Bloomberg argued that Tesla wouldn't have their usual end of the quarter push to rely on because of that global issue, forcing them to shut down operations at the end of March, which would be like the end of the quarter. But we'll also talk a little bit more about that in just a second. And then this really questionable article, and there's other words that I would like to use to describe this article, but I'm going to be nice and I'm just going to say questionable article from Investor Place, was arguing that Tesla has a long history of missing targets and falling short of expectations, and that this global issue is just another excuse that Tesla will use to deliver lackluster numbers that Tesla investors will eat up, as they always do. Okay, look, if you think that this global issue isn't a good enough excuse for a company having a bad quarter or even a bad year, something is deeply wrong with you and you're clearly overly biased for some personal reason, but that's on you. I'm not going to get into that. Anyway, as it turns out, Tesla actually beat expectations, posting over 88,000 deliveries in the first quarter. That's around 10,000 more deliveries than was expected, and it's a beat of around 14%. Now, it was down quarter over quarter, coming off of a record-breaking Q4 at the end of last year, but this was to be expected given how incredibly seasonal the auto industry is, that usually sees a big crash around the start of the year, although media sites love to leave that part out whenever they criticize Tesla's Q1 performances. In any case, they did also close their brand new factory out in that country that YouTube doesn't let me mention anymore, or at least not for right now. But they closed that factory for close to 2 weeks in February before reopening it. And then they also closed their New York and California factories around the last week of the quarter. California, by the way, is where they do the majority of their car production, but they still remain closed to this day. Now, a couple of weeks is not really a lot of time to have a hugely significant impact, but I wouldn't be surprised if they at least saw a lot of last minute cancellations because of everything going on. Despite those setbacks though, Tesla was still able to post year-over-year growth in deliveries of 40%. And while that may not impress any short sellers, I think it's important to keep in mind that this was at a time when the rest of the automobile market has been getting absolutely destroyed. Check out this article from Ars Technica that gives further details on why auto sales for Q1 have been, in their words, really, really bad. Now, I made a chart of all the automakers they listed and I added Ford because they didn't have that one listed at the time. But just keep in mind that for Tesla, this is deliveries, while the other ones, I believe they were listing revenue growth. They were just talking sales. But this is pretty dramatic, guys. Now, Tesla grew by 40% in the quarter, while most others just got hammered. General Motors fell by 7%, Toyota fell by 9%, Ford fell by 13%, Audi fell by 14%, BMW by 15%, Nissan by 30%, and then Mini by 35%. That's pretty crazy. Now, I know what you're thinking, well, Ale, that may not be a fair comparison because Tesla was trying to keep their factory in California open longer than they should. Well, yes, that's true, but if you look at when some of their competitors actually closed down, like Ford and GM, for example, it was only about a few days earlier than Tesla, so that's not really a good excuse in my opinion. Now, you could make the argument, well, Tesla has a much lower baseline than the competition, so it's easier for them to post growth without having to do gigantic numbers. And yes, that's true, but I still think that it's nice to see that healthy growth from Tesla during such a difficult kind of sales environment. And I think it can also be taken as a sign of healthy demand for Tesla's brand and their vehicles, because you're essentially talking about a seasonally down quarter, what is supposed to be the worst quarter of all for any automaker, and one that is clearly already being impacted by this global issue, as you can see with their competitors that are all getting basically destroyed. And yet Tesla is still able to put up 40% growth on a record breaking first quarter for them. So that's something that I really don't think should be taken lightly. Now, having said that, I am a shareholder in the stock, but I try to be as unbiased as possible in my videos. So it's only fair that we also take a look at some of the negatives as well. And I think there's plenty that we could actually look at. Now, I don't generally like to pay much attention to any short-term speculation, but I have to be honest about why I think that this next upcoming quarter will be very ugly for them, and why I also think that the rest of 2020 could also be a significant challenge for Tesla as well. But I'll give you all the reasons why I think that as we go through this. Okay, well, for starters, Tesla's California and New York factories remain closed, and there's no clear date on when they will reopen. Now, we know that US President Trump wants to start opening up the economy again around the start of May, and if that were in fact a day that Tesla could reopen, then we'd essentially be talking about a shutdown of at least a month for Tesla in the second quarter, and possibly even longer depending on how everything plays out. However, the current shutdown of Tesla factories may not even be the biggest concern, given that we're likely already in a global recession with record low manufacturing being reported in March. It's important to note that demand for new vehicles goes way down during times like these. If we look at light vehicle sales in the US according to Statista, we can see huge crashes during recent recessions. Not a good sign for a company like Tesla that sells fairly expensive vehicles starting at around $40,000 and averages out to almost $60,000 according to Forbes, thanks to add-ons and special features, which during a recession, it's hard for me to imagine people needing a brand new almost $60,000 car. Anyway, add it all up and it's hard for me to imagine Q2 being anything but an ugly quarter for Tesla. But how exactly does that translate to the rest of the year? Well, we know that Tesla was previously projecting over 500,000 deliveries for the year, and in their first quarter report, they didn't offer any new guidance. In fact, the whole report was only a couple paragraphs and it was very bare bones, which I think many were expecting to see a revision to the downside in that report. But as it stands, the guidance for 500,000 deliveries has not changed, well, at least not yet. So if we break it down by quarter to see how realistic that is given this horrible environment that we're in, distributed evenly to reach 500,000 deliveries, they would need around 125,000 deliveries per quarter. Well, we already know that Q1 was only 88,000, so if we drop that down, that means that the other three quarters would now need to average around 137,000 each to make up for it. Okay, well, we know that Q2 will likely be a lot worse since the California factory will be closed for at least 1 month of the quarter and possibly even longer depending on how everything goes. And we'll probably start to see the financial effects of a deep recession a lot more in that quarter as well. So just to throw a number out there, let's just cut that 137 in half and call it 68,000, which by the way, 68,000 is probably still too high. In fact, Galileo from Hyperchange is one of the biggest Tesla bulls that I know. He's out on YouTube, and he thinks that it'll only be 60,000. But just to have a number up there, let's just stick with 68 for now. Okay, well, to balance it out, Q3 and Q4 would now have to do around 172,000 deliveries each on average. To give you some context, that means that Q1 has an increase of 40%, Q2 shrinks by close to 30%, but then we see gigantic rebounds of 77% in Q3 and 54% in Q4 year over year. But that seems a little too optimistic to me for a global economy basically collapsing, and for that reason, I have to assume that Tesla will not be able to reach 500,000 this year and may be lowering their guidance at some point going forward. Now, having said that, is there still a chance that I could be wrong about these figures and Tesla manages to pull off what nobody seems to be expecting and they actually meet their guidance for the year, which, by the way, I don't even think that would impress the Tesla short sellers because I don't think anything impresses them anymore. But yeah, anything is possible, and what I think it really comes down to is whether or not the macroeconomy really recovers in the second half of the year, which I think Tesla would be heavily dependent on if they want to meet that guidance. Now, I used to personally think that we would see a sharp recovery in the second half of the year, but that was before this global issue really started to spread and hit harder, and basically the global economy started closing down and businesses started shutting down. Now I'm starting to think that we'll probably see a slower, more gradual recovery heading into next year. And so I could see business, like specific businesses, specific workers, uh, opening back up and getting back to work. And then we kind of slowly, gradually open up the economy throughout the year. And then in 2021, I think is when we start to really see a sharp recovery in the economy. So it's there's a lot of uncertainty there. It really depends on how quickly we can get this global issue under control and get people back to work. But yeah, there is the possibility that they could meet that guidance if we were to have a faster recovery, specifically in the second half of the year, and see a real sharp recovery at that time. But again, all of this is just speculation. I don't even like talking about this because, again, I'm a long-term investor, so I don't like having these short-term kind of speculative talks because none of us really know exactly what's going to happen. However, there are some things that I think are under Tesla's control, that I think Tesla is doing, that I think will help them not only survive this difficult period that they're going through in 2020, where I actually do expect them to lower their guidance. I don't think they're going to hit that guidance this year, but there are things that they can do and are doing that I think will help them survive through this year and come out of it as strong as ever before and really be firing on all cylinders on the other side. And there's three primary reasons why I think that I want to just kind of quickly mention to you before we wrap up the video. Number one, that's going to be the Shanghai Gigafactory, which, with the help of the government, according to Reuters, has already reopened, and according to Tesla's quarterly update, it's resulted in the factory continuing to achieve record levels of production despite significant setbacks. And as a result of that, Electric is reporting that Tesla is now making up around 30% of all EV sales in that country, which also happens to be the largest EV market in the world, so it's a pretty big deal. And while auto sales in that country are completely collapsing with an 80% crash in February, Tesla actually sold an additional 400 vehicles over the previous month, suggesting healthy demand for Teslas given the horrendous environments. Granted, the monthly sales are still tiny for Tesla, with that month only being around 4,000, but it's likely that number will increase dramatically once they ramp up and as auto sales in the country start to rebound, assuming that the economy improves throughout the year. Now, one problem that could arise is that it looks like Tesla is essentially closing down their Nevada Gigafactory because of that global issue, and the problem is that that's where they produce their batteries and other necessary components for their vehicles, so the Shanghai plant, I guess, would have to use parts that they already have, but I'm not personally too worried about that, at least not for Shanghai specifically, since I think that they will need to start sourcing locally anyway, but that could be a concern for everywhere else if the shutdowns continue a lot longer. Reason number two, though, is the Model Y, which has already started being delivered way ahead of schedule. It was previously planned for fall 2020, and yet they started delivering them as early as March. And from what I've been seeing online and on YouTube, it's been getting really good reviews as well, and that's important because this will likely be the sort of kind of secret weapon of Tesla, as it is targeting what is by far the largest vehicle segment in the entire world according to Statista as a crossover SUV, and in my opinion, it will probably outsell the Model 3 once cheaper versions become available, which would be a big deal. Now, it's still a little pricey with the starting price of around $53,000, but there should be a $39,000 version coming within a year, and once that hits the market, I do think that it's going to sell very well. And this may not be a huge deal, but I think I should also mention that while most people are used to going to dealerships to actually purchase a traditional vehicle, Tesla sales are actually done online, and they've even implemented a new contactless delivery option that allows the customer to sign most of the paperwork online and obviously pay online as well, and then have the vehicle delivered to their home where they can open the car with the Tesla app and don't even need to have any kind of interaction with an actual person, which I do think is pretty interesting. Not sure how much that will help their sales right now, but if social distancing measures continue to be practiced, then it's just another advantage that Tesla holds over much of the competition that rely on you actually going into the dealership so that they can try their best to basically upsell you as much as they can. And finally, reason number 3 why I think Tesla will survive all of this and be able to return to their normal operations after is because they have plenty of cash on hand to carry them over. In just the past year alone, Tesla has been very wisely collecting a ton of cash, nearly tripling it to over $6 billion last quarter. And then in February, Tesla sold stock to raise another $2 billion in cash, which ended up being a pretty good move considering that the stock was then trading at around $800 a share before crashing all the way down to less than half of that, at one point trading for as low as the $300 range last month. But that now leaves them with over $8 billion in cash, which Loop Ventures predicts is enough to keep Tesla afloat, even if they needed to keep the California factory closed for several quarters, which hopefully they won't even have to do that for even one full quarter, but I guess anything is possible. Again, as a long-term investor, none of this short-term noise really matters that much to me other than just kind of staying up to date with the company, which I do think is important. But I've already built out my position last year, a low $200 range for my cost basis. It's my third largest stock in my portfolio, and I've already built out the position that I want. So I'm not really looking to make any changes here. I wasn't selling the stock when it was trading at close to $1,000. Sure as heck, I'm not going to be selling now when it's like half the price. And even the lower it goes, definitely not selling. It might get to points where I even think about adding to my position, even though I've already built out the amount that I want. But if it was to get down to that like $200 range, I'd probably have to call Jeremy and we'd have to just start a hedge fund and just buy out Tesla, because I really think that like $200, the price that I paid for Tesla, I think was an absolute steal. But that's just my opinion. I'm not telling you guys what to do. Anyway, I'll always, by the way, always do your own research and make your own decisions. This whole video was just my thoughts and opinions. I could be wrong on a lot of it. You know, we can all be wrong. We speculate. It's fun, but it's just my thoughts and my opinions. But anyway, again, 2020 I think will probably be a rough year, but then I think we'll kind of get back on track, and that's just my opinion. So anyway, those are my thoughts. I hope I didn't leave anything out. I think that pretty much covers everything. But let me know what you guys think about all the things I said. Do you agree or disagree with anything? And if you want to add anything to the conversation, make sure you leave your comments down below. And stay safe out there, guys, with everything going on. Let me know how you're doing. Let me know how your family's doing. I hope you're all doing well. But thanks again for the support, and I will catch you guys in the next one. Take care. Bye-bye.